week. So far this earnings season, about 74% of companies have beat on earnings. Nearly 60% have top sales estimates. That's according to the latest numbers out from FactSet. Here with more on what exactly this means for the market's momentum going forward, we want to bring in Drew Pettit, joining us here on set, Citi's U.S. strategist. Drew, it's great to see you finally in person. Thanks so much for coming in.
Well, happy to be down here. Thanks.
So it's a huge week here for the markets, like we were just laying out, at least when it comes to earnings. We've seen some of that momentum shift here this week. We're seeing a bit of that momentum to the upside. Is that going to continue, do you think, as we get more of these results coming in?
So I don't want to be the bearer of bad news necessarily. I don't want to be viewed as a bear, maybe a little bit of a teddy bear at this point. But we just had a pullback. We reset some expectations. So a little bit of a cleaner setup, but I don't think we've fully reset risk reward from here. We're still preaching patience. Our full year target's still 5,100. And to be honest with you, I know you gave some great stats on how many companies have beat. That should be expected this quarter.
Mm-hmm. So what is the ultimate theme that you expect to prevail, even as we're looking at, who's beating, who's missing, and where some of the forecast is really being looked at to signify where demand is remaining strong for the companies?
Okay, the overall theme we expect for this quarter is beat and hold.
Okay.
So that's not really exciting at this point. I think a lot of companies are basically going to use the run we've had year to date, especially in a lot of the growth names that have outperformed, to maybe temper some expectations, because we think the back half, it's going to get a little bit harder to beat, especially when we get to Q4. I know you just had an economist from one of our competitors in talking before. If you look at a lot of the projections, yes, revisions have moved higher for GDP across the board for a lot of the big macro trends. But consumption, real GDP, that demand, those growth rates are expected to slow because inflation's been a little bit stickier. So that's a bit of a headwind. But on the flip side, again, not trying to talk out of both sides of my mouth, but there's puts and takes here. We're starting to see the manufacturing economy come out of its recession. We're starting to see cyclicals improve. So while the growth names in the index might have a tougher time growing off of tougher compares from last year, the cyclicals in that part of the market needs to contribute to the earnings growth story for the index.
So it sounds like you're expecting a lot of those Mag 7 names that we've been talking about here today and really over the last several weeks. We're going to see some pressure, maybe potentially in those names following their earnings results, given the tough comps later this year?
It's not even just the tough comps later this year. Honestly, it's kind of law of large numbers. They're growing at a high rate. It's hard to continue that forever. But where some of these stocks are priced, like you guys were talking about semiconductors, I think that's a great example. They're not just pricing in a good quarter, a raise for next quarter, a raise for this year. They're kind of pricing in like compound annual growth for the next 5 years at 25 to 30%. That's how we do this reverse DCF work to kind of figure out what's priced in, not what do analysts expect, but what is the market pricing in. And that level of compounding growth does not leave much room for error. So I think it's the long-term expectations that set a high bar for those companies. So you don't just need a beat and hold to help move the stock higher or sustain the levels. You need a beat and raise and confidence in the very long-term trajectory of these companies.
And so if we don't see that from companies, then how does that kind of position the broader market rally, especially given that we had seen some slippage last week, we saw some volatility, and then additionally coming into the start of this week, we're thinking about whether or not those 5 names could really put the rest of the team on their back, as Marshawn Lynch would say back in the day, and continue to power a rally further from here.
Love a reference to a Bills player. But I think we'll keep getting a little bit of chop in markets. Honestly, nothing works in a straight line. I think this market is going to be an example of it. Honestly, it's when it comes to these growth stocks, I think a little bit of a pullback and a reset is healthy. We like the fundamental story. I think that'll put a higher floor under markets. It'll put a higher floor under the growth names from here. We're not calling for a big, massive correction, but I think around 4,800 mid-year, you can probably be a little bit more aggressive.
Drew Pettit, Citi U.S. strategist. Thanks so much for taking the time. Great to see you in person.
Yeah, thanks for having me in. Really appreciate it.
Absolutely.